Greetings, everybody. My name is Keith. I'm with Hemp. Here is my point. Today, we're going to talk about the topic of tax brackets. As you know, a lot of you are hearing about the tax cut bill that Donald Trump has introduced. He's called it the Big, Beautiful Bill. And a lot of people are referring it to the Big, Beautiful $1 billion bill. $1 billion bill. That's crazy. We have $1 billion bill. But a good portion of that is the tax brackets that he has introduced when he introduced in 2017. Just to give you a little history, in 2016, the tax brackets that exist before Donald Trump introduced his were these 7 tax brackets. And each tax bracket was associated with an income threshold level, and or if you made income during the course of the year. Now, these tax brackets are progressive, which means that that portion of the income that you make during the course of the year is taxed at that certain rate if for a portion. And I'm going to explain to you that in a second. The tax brackets that were prior to Donald Trump's tax brackets that he introduced in 2007 was 10%, and 10% was for the, I guess, for the people for incomes. If you accumulated income or if you adjusted income at the time of filing, this is for single filers, was from $0 to $9,250, right? So if you're, let's say you made $11,000 a year and you did your deduction and your adjusted gross income was now let's say it was $9,250. That $950,000 would be subject to the tax of 10% because you're between $9,250. Let's say you made $15,000 that year. Then you and your adjusted gross income was $12,000. You reduced it down to $12,000. Well, the first part of that $12,000, $9,250 of that $12,000 would be subject only to the 10% tax bracket rate at that tax bracket. The other portion of your $12,000, which is left over, which is approximately $2,750, right? Add that to your $9,000. That $2,750 would be subject to the next bracket up from that, which is 15%. So only $2,750 would be subject to the 15% tax, not the entirety of your $12,000, even though the tax bracket may say any amounts between $9,251 and I think it was $39,000 would be subject to 15%. It's only proportionary. So which means is that if you had an income of adjusted gross income of $12,000, a portion of your income would be subject to 10%, and the other portion will be subject to the other tax bracket of 15%. Now, in the 2016 tax brackets, the proportions were 10%, 15%, 20%, 25%, 33%, 35%, and then 39.6% was the highest tax bracket for any monies that was made in excess of $450,000. So if the example, if you made $500,000 that year, and if you had an adjusted gross income of $500,000 after you took your deductions or itemized deductions, and it was $500,000, the only portion that would be subject to that 39.6% would be the difference between the 450,000, that is threshold, and the 500. So only $50,000 of your $500,000 adjusted gross income would be subject to that 39% tax. The other portions of your salary or of your income would be subject to the lower rates, starting at 10%. Right now, Donald Trump introduced his tax brackets, his other tax bracket, and his tax brackets went like this. First tax bracket again is 10%. The other tax bracket is 12. The next one after that is 22%. Then the next one after that is 24%. and then the next one after that is 32%, and then the next one after that was 35%, and then the next one after that was, of course, 37%. And the pundits who are on in Congress are saying that since a lot of people will not experience being subject to the higher tax brackets, by reducing the highest one from 39.6 to 37.0, um, he gave the rich a break as far as tax cuts, so that people who make more than at his thing, his threshold was $609,500. So anybody who made an excess of 609,000, let's say they made again the same, let's say they made $1 million, the only portion that would be subject to that tax would be $391,000 of that income would be subject to the 37% tax, not the entirety of the $1 million. Okay, hope this helps out. Now, what people are not talking about is that Donald Trump did give certain brackets, depending on if you look at it, tax cuts as well. So the old one, the second tax bracket in the old one was 15%. Well, the second tax bracket in Trump's is 12. But the nuance is that he changed the thresholds in the income for single filers and married. Now, if the income thresholds, let's say for the 10% is in Trump's 10% is from 0 to 11,500, then the married filers are able to enjoy 0 to 23,000. That means because there's two people. If you are filing as married, then you can, and if you're filing as head of household, and you are filing your taxes as filing jointly, then you are, if your income together or as a married couple fell between 0 and 23,000, you will only be subject to 10% of the tax of taxable income. That will be your obligation. Now, in 2024, the United States brought in $2.4 trillion in tax revenue for income tax revenue. And according to each brackets, in the 10%, for example, in the 10% bracket, out of the 10% bracket, out of all the people that had to pay, was subject to the 10% bracket, which is everybody, if you make over 17.5, if anybody makes over 11,500 in current tax ones, everybody's taxed at the 10%. Everybody, even the millionaires. A portion of their $1 million income is taxed at 10%. A portion of their $1 million income is taxed at 12%. A portion of their income is taxed at 22%. Their portion of their income is taxed at 24%. A portion of the portion is taxed at 32%, and the other portion of that is taxed at 35%. So the people who make in excess of $1 million or over the, up to the threshold, the highest one, they pay into every tax bracket. So just to give you an example of how, based on just breakdown of brackets, the 10% bracket in 2024 paid $205 billion in tax revenue. That was the share of the 10%. Of the 37%, the 37% brackets paid $571 billion, their tax bracket. And the 35%, which paid the most out of all of them, out of the portion of the 2.4 trillion tax revenue, they paid $761 billion in that tax bracket, the 35% tax bracket. So when they say that the rich need to pay their share, they are in essence paying their share. They're paying more. They're paying their share of what they are subject to as far as tax bracket, because it's a progressive tax. So they are paying their share. So if you're a person who made an adjusted income of $11,500 and you paid $1,150, that was your tax obligation. The guy who made a millionaire had to pay that same tax, because a portion of his income was taxed at the same rate that yours was. You just didn't make $1 million. He did. So as he goes through it, he's having to pay taxes in each bracket. He's subject to each bracket because he made that money. So they are paying their share of the money. So now, uh, if you are thinking that some millionaires are taking their money in other compensations other than income tax. So we're talking about income tax. Now, again, yes, there's a lot of ways to get around taxes. You could pay a certain amount of C-level executives through stock options, which means that they probably get $100,000 W-2 income salary, right? And the rest of their compensation is in stocks, right? And what they do is they take that stock to the bank, they sell that stock to the bank gives them a loan against the stock value, and that's how they get their money. There's so many ways you can get around uh, this doing so, but that has to be a negotiation, and it's usually done for CEOs. Now, every CEO doesn't take that deal, right? Because your tax value can go up, and there may be restrictions on when you get stocks and what you can sell and what you can do, right? So again, just to give you an FYI, the highest tax um, of W-2 wage earner uh, was 100. He made $121 million in wages off of W-2. He took all his money in salary, right? So he got all his money through W-2. He didn't get it through stock options or anything like that. And when he adjusted for itemized deduction, he had um, an adjusted income of $100 million. So he paid every tax into every tax bracket there was. So as for him, he certainly paid his portion and share of the taxes. So when we're looking at this, when we're looking at the ultra rich, is that there's a breakdown. Some people are getting money through stocks and bonds. Some people are having a net worth. And when you look at net worth, that's mostly in stock assets and values because they own a portion of the company or shares. That's reflective of probably their shares that they have, right? If they own 51% of their company and the company is worth, $2 trillion, then if they own 51% of that, then they in essence have $1.2 trillion, and nobody's making that much. But like Elon Musk. Elon Musk has his stock value is at 900 something $billion, right? He owns 51% of the company. So if he owns 51% of the company, then he's going to have a value of maybe $450 billion in stocks, right? Well, if his company is worth, let's say, $800 billion, if his stock is valued at $800 billion, he owns 51%. He's going to, he has a worth of $395 billion. So you calculate that and you look at those numbers. But getting back to tax brackets are progressive, which means that depending on how much you earn during the course of the year, each bracket is going to tax you at that portion of your income. So if, for example, in my new one that I'm suggesting, I am introducing an eighth bracket. The last two had 7, I have 8. And what my brackets go as, my first bracket is 10.5%. And it's for single filers who earn between 0 and 17,500. So anybody who has an adjusted gross income of 17.5 or less, they would be subject to the 10% tax. Let's say, and my next one is going to be 14%, and that's for any incomes above 17,501 to 52,500 $52,500. So any income between 17,501 and $52,500 is going to be subject to the 14% tax bracket rate. Now, what that means, let's say that you made $52,500. That was your adjusted gross income after you take all your deductions and exemptions. That was your adjusted gross income. The $17,500 of that would be subject to the 10% tax, right? 17,500 of that income. So if you subtract 17,500 from 52,500, which left is $35,000, right? Now, because the $35,000 falls within my next bracket of 14%, 17,501 to 52,500, then only 35,000 is subject to the 14% tax, not the entirety of the 52,500. Only the $35,000 would be subject to the 14% tax. The other 17,500 is going to be subject to the 10%, the lower tax. You see what I'm saying? So it's progressive. So it's proportionary to the money that you make during the course of the year. Same with so if I was a millionaire, I'm going to effectively be paying into every tax bracket in the bracket up to what mine's is my 8 brackets. I'm sorry, I should have told you, is 10.5%, 14%, 17.5%, 21%, 24.5%, 28%. Then it jumps to 35%. And then my highest tax bracket is 38.5%. And that is, I call the millionaire bracket for any income in excess of $1 million. If let's say, for example, you had made $1,500,000, and that was your adjusted gross income for that year, only $500,000 would be subject to the 38.5% tax rate because it's for incomes above any portions of your income above $1 million. You get it? So if you made if you had an adjusted gross income of $1.5 million, the only portion of your income that would be subject to that 38.5% would be $500,000. That's the only portion of your income that would be subject to that 38.5. So I hope this helps out. This portion was brought to you by Greet Note. Greet Note is a greeting cards company. They put the greet in greeting cards. They have odd number birthday cards. They have odd number anniversary cards. They have cards for Veterans Days that's coming up, Independence Day, on all the holidays, except for Halloween. For some strange reason, they don't have cards for Halloween. They're a Christian organization, and they're veteran owned. That's what they're veteran owned as well. So I want you to check them out, GREETNOTE.com. My name is Keith. I appreciate you taking the time to check me out. This was a study on Tax Brackets 101. I hope you enjoyed. I hope you get something out of it. If you did, hit the like buttons, leave your comments. Tell me what you think I could have been more. Yes, I would love to have props. I'm working on that right now to show you, to give you that a feel of how these things work out in the calculations. But hopefully you could take it from the information I give you and you can take your time and do the calculations yourself. So again, I appreciate you coming to check me out, and we'll see you on next time.